Hey, what up, YouTube? It's your boy, the Stock Dude, back on the prowl again. In this video, I got two high-paying, and I say again, high-paying dividend stocks. Believe it or not, one of these dividend stocks I just bought Friday, and it pays a 21% annual dividend yield, and it pays a monthly dividend on top of that. The other one, which I did not buy, actually is probably the more secure and safer company to own, even though I didn't get none. This one pays a 10% annual yield dividend on a quarterly basis. So one of them pays 21%, which is outstanding, and the other one pays 10%. So these two stocks I think you ought to put on your watch list and do your own due diligence if you like having your hand stretched out and making money. But if that doesn't turn you on, you don't really care about making money, if you don't really want dividends, then maybe this video is not for you. But for those of you that stay and who are interested in making money off of dividend paying stocks, I got something for you, man. The first stock on the list goes by the name of Two Harbors Investment Corporation, ticker symbol TWO. Two, coming in at a price of only $6.64 per share. Now in the description it says Two Harbors Investment Corporation operates as a real estate investment trust, a REIT, that focuses on investing in, financing, and managing residential mortgage-backed securities, also known as RMBS, non-agency securities, mortgage servicing rights, and other financial assets in the United States. Now, Two Harbors Investment Corporation is a solid mortgage REIT real estate investment trust. Now, they make their money off of mortgage-backed security loans. The risk of the investment. Now, this is the bad part. You know how I do. I got to tell you the good, the bad, and the ugly, just like Clint Eastwood. So, the bad part, this is the risk. If we go into another real estate collapse like we did back in the Great Recession in 2008, the stock price of Two Harbors Investment Corporation could suffer and go down if there is an overabundance of mortgage loan defaults. Two Harbors Investment Corporation stock price could suffer. Now, this is the good part. This company was incorporated in 2009, only 1 year after the Great Recession. So in other words, they made it through the Great Recession, because only 1 year after the Great Recession happened, this company was incorporated. So what I'm saying by all of that is this: you don't incorporate a new company during a Great Recession. That's not a normal thing to do. So what that tells me is, being that this company is still around and is still profitable, that they know how to handle if we were to have another Great Recession. God forbid we do, but they made it through, so they know what to do if that occurs again. So Two Harbors Investment Corporation is not necessarily a risky stock, because they've already proven that they can handle the Great Recession. Now, the main thing that drew me to this stock when I found it was this: Two Harbors has a 10% dividend yield paid quarterly. Let us go to a zit chart. First thing I noticed right away, it seems like this stock is trading between $6.75 a share and $6.15 a share. It's kind of trading in a range. So as always, I'll recommend that you guys try to wait for a pullback, if possible under $6.40 per share. You good, because this $6.15 support level looking at how many times it bounced off of it at the bottom of the chart, it seems like that it's not going much lower than $6.15. So anywhere between there, I would consider a buy zone. Second stock on the list goes by the name of Credit Suisse X-Links Crude Oil Shares Covered Call ETN, ticker symbol USOI. Now that's a lot to say, but Credit Suisse X-Links Crude Oil Shares Covered Call ETN, ticker symbol USOI. This right here is an exchange traded note fund. What are exchange traded notes? They call them ETNs. Now, exchange traded notes are types of unsecured debt securities that track an underlying index of securities and trade on a major exchange like a stock. ETNs are similar to bonds but do not have interest payments. Instead, the prices of ETNs fluctuate up and down just like stocks. So exchange traded notes that tracks the price of crude oil. That's what this company is all about. ETNs that tracks the price of crude oil. Now everybody that's watching their dollars at the gas tank, how much you spend to fill up your tank, it costs us a lot more now than it did a year ago. So oil seems to be going higher. Now this company sells covered call contracts to create additional sources of income to pay that 21% dividend. You don't believe me? I'm going to show it to you right here on FinViz. There it is, right there. Dividend percentage, 21%. Now, with a dividend that's that high, I'll be honest with you, it does carry a certain degree of risk. Because when a dividend is that high, there's always the likelihood that at some point the company may decide to cut the dividend. But one thing I can say for a fact, they've been paying this dividend every month faithfully without missing any payments since 2017. So the past 4 years, they've been paying 20% plus annual dividend. Not only just paid, but you get paid every single month. And looking at this chart, like I always say, I trade what I see and not what I hear. Because I hear a lot of talk about stocks like this and funds like this that they're risky and you shouldn't mess with them and you should just stay away from them. But yet this chart tells me just by the amount of buying that's taking place in this stock, people are buying this stuff left and right. August the 19th is when they came in, hedge funds, millionaire investors, came in and made a ton of purchases right around the $4.80 mark. Since then, as of late, the stock is trading at $5.32 per share. They're telling you on TV, don't buy, run the other way. It's too risky. But behind the scenes, they're buying it. So if millionaire investors are buying it and television is telling you don't buy it, who you listen to? Don't listen to me, because I am not a stock advisor, nor am I a financial advisor. So take anything that you hear on this channel with a grain of salt. But what I can tell you is that on Friday, I got mine. Because with a dividend that high, that's paying over 20%, if it does get cut, all I got to do is just sell the shares and move on. It's not like they locked in your account. You can't sell them. You just keep losing money and you can't sell. Nah, if you don't like the way it performs or if they cut the dividend, get rid of it and watch my video next week, and I'll put you into another one. So these two stocks right here are two bangers that I think that you really need to put on your watch list. Keep your eyes on them. I'm the one known as a stock dude. I'm going to holler at you later.